Good afternoon, good evening. Welcome to my discussion board. This is my first series of videos where we are going to discuss the Zambian economy and where we are going in terms of economic growth, in terms of key macroeconomic indicators and fundamentals, the GDP growth rate, the inflation and the employment levels, and general investments uh, climate in the country. First, I want to say that I'm trying to transform this channel into a more productive discussion and allow a more academic and also practical and applicable discussion of public policies, discussion of things that actually matter to people, and we want to be very supportive of this platform and be able to allow people to come here and first and foremost learn and also air out their views on issues of Zambia's economy and issues that affect the people in Zambia and across Africa. I think this is a good opportunity for us to begin to engage constructively, not only with public policy issues, but also with regards to governance issues and how the governance issues actually affect economic indicators. And today I want to just discuss a broad range of issues that I think are important for people to know and understand. One of the first things that I want to do is if you get a chance to watch this video, please share this video. Please comment in the comment section, and also please, if you can, subscribe in the bottom here. Subscribe to this channel. We are going to be as objective as we can to ensure that we can actually engage a broad range of our people. The first thing that I want to talk about today is the issue of GDP and also inflation and employment and investments. Today, I'll just skim around those things and look at what is going on right now, give you a little bit of where we're coming from and where we experts have projected we are going to be in the coming year. I want you to also to know that I'll also highlight a few key news highlights in the Zambian economy, in the financial markets, in the bond markets, and give you highlights of what's going on in the Zambian bond market and what the market sentiments are, so that you guys can be up to date with that stuff. So without wasting much of your time, I want to look at what is going on right now. A lot of people, people are talking about the $5 million contract awarded to Lazard of France to restructure Zambia's 11 billion external debt, largely about half of it, which is owned by bilaterally with China, and the other one is through various private sector lenders in the bond markets and Eurobond market, to be specific, and how that has affected our economy and how that is going to be one thing that we are not going to get rid of anytime soon. It will be with us for some time. But here is where we are. the Zambian government has decided that they are going to hire Lazard Freres to actually an investments bank, French investments bank, to actually restructure the $11 billion external debt. So we have about $11 billion external debt. Okay, and if you have followed Zambia's progress in infrastructure development, you're going to realize that most of these debt were applied to a slew of infrastructure development across the country, roads, new district infrastructure, schools and hospitals, building of hospitals and stuff like that. And what has happened so far is that we have accumulated about $11 billion of these debts. And in the foregoing, when these were being acquired, the idea was to invest these funds into infrastructure, that would spur economic growth. Although that is true, and that was a positive outlook at the time that the dates were being contracted. What did not actually, or what came out after the implementation of various capital expenditures on roads, building of schools and of universities, and other infrastructures, was that I think there was a rush into implementing these projects without looking at their net present value and how much it is that these projects were going to add to the economy. And intermittently, the projects themselves were good because they provided immediate jobs to in the construction industry. There we saw a boom in road construction firms, with short-term labor, demand going up, and with labor workers on construction of roads and buildings and schools and hospitals, which was a good thing, which was a positive expenditure. Government purchase increased as Eurobond dollars began to flow into the economy, and the government began to implement these things. However, what we did not, I think, as a country, do is to also invest in what I have begun to term as intermittent capital projects that could give us immediate returns or seasonal returns in a more sustainable way. And some of these examples of those projects that I thought would have been very good to invest in was the investments. Government should have actually invested in agriculture. It should have pumped in substantial amounts of money into the agricultural sector, and particularly in the development of irrigation infrastructure, and also in the smart farming, into the agro processing sector within the agriculture industry. And also they would have actually helped create a robust marketing and also commodity trading infrastructure in order to ensure that the farmers and the subsistence farmers in the country have ready market whenever we have bumper harvests. And also, not only that, that we could have allowed more private sector participation other than just the government food reserve agency buying all the maize, and then after they exhaust their finances, then they allow the private sector to come in and buy the rest and participate. I think what we need to do is change the model, even going forward, is to change the model and allow private sector participation the whole time and the whole season, and probably develop some kind of commodity trading system or infrastructure in place. But that's another discussion for another day. For now, I want to concentrate what has so far happened, and then Zambia was experiencing a lot of slower growth because of reduced foreign direct investments, especially in the mining sector, and because of slowdown in the growth of China's economy and many of the BRICS economies, basically Brazil, Russia, India, China, and of course South Africa. The slowdown in the BRICS economy, which includes, of course, China, created that reduction in demand for the red metal, basically copper, and that created a lot of problems for the mining industry, which is one of the export earners for the economy of Zambia. And what has happened now is that with COVID-19 coming into play at the very beginning of 2020, somewhere around first quarter of the year in March, this has actually exacerbated the problem, and to where China had to actually shut down its economy and trigger a global pandemic. And the United States of America followed suit, European Union economies followed suit, and basically there was a negative shock to the global economy due to the outbreak of the pandemic, and this triggered a lot of ripple effects into the developing economies as well, where there was a disruption in supply chain, there was a disruption in production in many industries across the globe. So I'm giving you an overview of where we are as a Zambian economy and how global trends and all these things have affected these. In fact, this is for these four macroeconomic fundamentals. So what you need to understand is this: because of the things that I've explained, those things, the slowdown in our economy that began way before the pandemic began, and also the pandemic began and exacerbated the problem of this negative growth that we were going to, as an economy. So the lack of investments into the mining sector is right here. Lack of foreign direct investments into the mining sector has caused low output of copper, and low output basically means that you're not producing and you're not exporting enough to earn that foreign exchange that the economy needs, and that has clearly has an effect on our GDP growth rate. That has had a very negative impact on our GDP growth rate. Okay, so our GDP growth rate has been going down, and also the injection of capital expenditure into the economy during the infrastructure, purchases and expenses that the government was doing. We have seen some mild increase in the inflation in Zambia, and data out there indicates that towards the end of around 2019, around 2019, we saw inflation rates, increase. I mean, from 2018, it rose from about 7.5% in 2018 to about 9.2% in 2019. And it was expected at the end of 2019 to continue to grow above 9% into 2020 and 2021. Okay, so in terms of inflation, we've seen that go up. Okay, inflation, you see an arrow like that, means it's going up. So inflation was going up, and because inflation was going up, of course, we had low investments into the mining sector, and what we began to see was that unemployment also increased. So unemployment went up, okay, in the country. And because unemployment was going up, inflation was going up, a lot of people started feeling that they're losing, they are more poor than they were a year before and the year before that. So inflation goes up, general prices goes up in the economy. Your dollar value, your kwacha value is buying less and less. If that is, the government doesn't increase your paycheck, and there's no increase in the salary. So inflation reduces your purchasing power. So your marginal propensity to spend, that ratio goes down. I don't want to go into so much technical stuff, but generally speaking, prices go up. You feel like, in fact, you buy less with every kwacha that you have. Okay, unemployment goes up. Aggregate consumer expenditure in the economy goes down. Okay, so consumers, I don't know if my body is small. So consumers, consumer expenditure in the economy goes down because unemployment and inflation. And because consumer is going down, what happened to GDP? Okay, GDP contracts, it goes to negative. Okay, goes down. GDP growth goes down. If people are not spending their money buying goods and services, investments will slow down, and and so on and so on. So this is a real effect that has been happening in the economy, and you see how this connects to GDP growth rate and also slowdown of wealth creation in the country. So again, these videos are meant for us to learn, at least at a minimal level, what's going on, and also explain what has the government of Zambia, what actions have they taken since all this has been happening. There has been some good announcements, some good responses. When all these things was happening, the Bank of Zambia responded very actively into the markets to first and foremost make sure that inflation rate is under control. And they did a good job. They have actually done a very good job in making sure that they control inflation. And also the other thing that they've done as a bank, as a monetary policy response, especially on controlling inflation rate, and also the level of exchange rate for kwacha that began to depreciate, because all these effects here have actually a negative effect on the strength of the kwacha. And because of that, kwacha was actually depreciating at very high levels, and the Bank of Zambia had to inject and respond by putting some forex or flooding some foreign dollars and foreign currency into the economy to make sure that the kwacha doesn't run away. Okay, so the Bank of Zambia has been very active in the last quarter of the year last year, and to try and make sure that Kwacha is actually maintained. Right now, Kwacha is trading around $18, 18 Kwacha to $1, which is pretty high, but it's maintained that steady level. I mean, there's been some marginal depreciation. There's been actually substantial depreciation because it was around 13 or 14, and now it's around 18 Kwacha to $1. The Bank of Zambia has performed very well in making sure that there is stability in the foreign exchange market, and also holding inflation in check. However, there's a piece to all this, and there's two institutions that basically manage the macroeconomic fundamentals in the economy, and that's Bank of Zambia and the Ministry of Finance. So the Ministry of Finance deals with taxation, revenue, and also taxation, basically revenue, how government gets money, and also on how government spends money. And the Ministry of Finance decides how much taxes to increase and how much taxes to collect, and also how to spend it. So the government expenditure, remember the roads that I talked about, all that is done at the Ministry of Finance, which we call fiscal policy. So Ministry of Finance has a role to play. So when they began to spend on infrastructure and all that, government expenditure went up. We saw minimal increases in intermittent and short-term jobs in the construction sector, because the fiscal policy responded. And that increased the money supply in the economy. When money supply in the economy increases, inflation goes up. Okay, inflation goes up, and when inflation goes up, Bank of Zambia has to actually increase. Now, this is how they respond. Okay, when inflation goes up, Bank of Zambia has to increase what we call the lending rate. So they have to increase the lending rate. In fact, increase it to where they can mop up that excess supply of money in the economy to rein on the inflationary increases. I know it's too much to understand, but Bank of Zambia has been responding as Ministry of Finance spends money. There's too much money begin to increase, money supply increases in the economy. The Bank of Zambia responds by increasing the lending rate, the policy rate, and that mops up money into the economy, and inflation stabilizes, prices stabilizes in the economy. So where are we going? Where we are going in a nutshell, and I want to make these videos only 30 minutes. Where we are going is two places into 2021. Number one, if we are successful in negotiating, if Lazard Freres, a company, a business investments, bank that from France, manages to successfully negotiate restructuring of our debt, what we are going to see is two things. We are going to see our debt maturity dates, maturity of our Euro bonds extended. That's number one. Number two, we are expecting to see that they negotiate the lowering of interest on those loans. Now that'll be very hard to do, because already the lenders are taking it, instead of cashing in their money as Eurobond maturity dates become due, they are having to extend. When you extend a debt instrument, what happens is that you're taking on more risks as an investor because of inflationary risks. Okay, so at that point, you're supposed to actually increase interest rates. But the strategy, the negotiating strategy that I think Razad Fredes will go with into these negotiations will be either one, maintain intermittently the interest rates, and also ensuring that they reduce or they bring them down, so that Zambia pays the minimum amount of servicing of interest on the $11 billion debt that we owe people. Okay, what that does is that it frees up some money for the government of Zambia to then engage in dismantling domestic arrears or domestic debt that they owe suppliers of goods and services to the government. That's a lot of things I've said here. And why is that important is because suppliers of government goods and services in the economy, they are local debts. So if government can save money, the millions of dollars that we are spending on a monthly basis, on a quarterly basis to service the $11 billion interest, we can then have a saving that we can push to dismantle local debt. Local debt, dismantling local debt is very, very important. As I come to the close in the next 4 minutes, it's very, very important because when you dismantle local debt, you're actually paying suppliers, local firms. If you pay them, they're going to actually invest more. They are also going to employ more people. They're also going to spend that money and pay salary arrears of their employees or terminal benefits or whatever that they need to spend. And they're going to spend it in the local economy. So it's important that the government pays local debtors, because those suppliers of goods and services will actually local creditors, people that actually give goods and services to government, employ people. So if they pay them, then they can pay Zambians. So for now, I'll end here. Again, I have not gone into academic stuff. I wanted to be as plain as I can, and also make sure that we use layman language in our discussions so that we can learn from each other. And also, please don't forget, share this video, and also comment, tell me what you think and about this video and the topics that you want me to discuss or explain in the economics world. Again, my credentials, I have a master's in business administration with a concentration in data science. I also have a BA, Bachelor's of Arts in economics. And I spent about a year or so in grad school studying economics, applied economics. So please comment again. I don't know everything, but I will share with you what I know. That way we can learn together, and also I can explain some concepts so that a lot of you can begin to understand what's going on in Zambia, why there's so few jobs available, why government is doing what they're doing. We can explain those things objectively right here on Masheke Akashambato channel. And thank you so much for watching. Don't forget, subscribe forward. We can do citizens, and maybe later